Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Eric Hadik, CEO and president of InsideTrackTrading.com. Welcome back to the show, Eric.
Oh, well, thanks for having me back, Jim.
Eric, the head of the Fed, Jerome Powell, spoke to the world. Did he have anything interesting or new to say?
Well, I think that they were kind of anticipating it at least the last few days, but it was certainly a paradigm shift on the mentality and the viewpoint towards inflation, at least a limited inflation, and that the Fed is now going to respond to signs of that quite differently than they have in the past. And of course, that's with certain criteria, and not if some rampant inflation ever came back, but just discussing how basically, without saying it exactly, but things are too deflationary or were too deflationary earlier this year, and that they'd even view unemployment a little bit differently in that context. That the really intriguing part to me, though, kind of bringing it back to the markets, is that it's a perfect example of what I always talk about with technicals versus fundamentals. And my perception has been, and this just reinforces it, is that your really noteworthy confirming fundamental news and events usually occur about midway through a trend. And that's why I am such an advocate of technicals, because they will give you warnings way before then of something that's shifting in the market. And the perfect example was the second half of March this year, when my work generated multi-month buy signals both in stocks and in silver. And I know I've discussed this with you since then too, is all of my work was showing, and this is what I was forecasting and why I thought it was the time to get into silver finally, was that we would see a commodity inflationary environment from March of 2020 into May of 2021. And that was what I had been waiting to see, and several of these signals lining up, before I thought silver could finally begin to outpace gold in its advance. Because that's when you see silver do that. Up until then, gold was always rallying on different forms of safe haven status, whether that would be when the market took sharp dips, or then when we had different flare-ups and fears in the Middle East and North Korea, and then obviously COVID, just as far as fear of uncertainty. That's what often spurs advances in gold. But a lot of times silver doesn't participate because silver has its industrial commodity side. So many of those things are viewed as potentially deflationary. If the stock market's having a sharp sell-off, or if something like the coronavirus hitting and devastating the economy, gold has a rally, while silver says, wait a minute, this is going to really restrict productivity and demand, and so it never participates to the extent of gold during those times. But this was the time, from March of 2020 through May of 2021, when all of my work was telling me to look for a commodity price inflationary environment. And so you start to get that movement, and now you get the proclamation midway through that, yes, this is what we actually want to see to an extent.
What specifically do you think is going to happen with gold?
My outlook has not changed for the last 5 years now, that I thought gold would have a bull market from late 2015, early 2016 into late 2020, early 2021. So I think we're certainly getting to the latter part of that from a timing perspective, but you can also look at most both bull markets and bear markets in metals and certain other key markets, and often the biggest moves are at the end of a cycle. So just because we're nearing the time frame when I think we'll see a multi-year top take hold does not mean that that we've expended all of the upside energy in gold.
A lot of people were predicting $5,000 gold, $10,000 gold, $20,000 gold, whereas I think a lot of people thought when it hit $2,000, perhaps that would be the peak of the party. What's your view on that?
Well, the by and large, the people predicting the $5,000 and $10,000 and $20,000 gold have been saying something similar for 30, 40 years. And occasionally that broken clock is right, and you get a surge, and then for the next 5, 10 years while gold's selling off, you keep hearing where it's going to the moon, it's going to skyrocket, with no real clear timing or what might trigger that. It's always kind of the same underlying mentality, and there certainly is that potential for an accelerated rally at the end of this cycle, and I think there is the groundwork laid for something like that. Not necessarily to the numbers you're talking about, but I think that we are going to see a kind of a wild and precarious time between now and through the second quarter of next year. So I think there is more upside potential. I'm not looking that high, but you also right now are experiencing kind of a classic technical, it's hardly even technicals, but with gold spiking to new all-time highs. Its peak was around 1920 back in 2011, and so it has now surged above those. You usually get a little bit of follow-through. That's also when you hear everyone talking 5,000, 5,000, 10,000, and so all your Johnny-come-latelys suddenly jump in with the classic FOMO, as they say now, the fear of missing out, and they end up buying a peak, and you get some pretty serious selling from there, maybe some consolidation, and then the market needs to build up a new and higher base or plateau from which to enter another wave up that's going to have some more staying power. So I think that we are in that corrective time now. I think that gold and silver could have some quick, sharp sell-off. A lot of my work was looking at right around August 17th, 18th for a secondary high, and then a bigger sell-off or a quick, sharp sell-off from there. And I think that from there we're going to see a couple months of consolidation. Now that consolidation can also be the start of a new wave up. And if that sounds contradictory, I should just kind of explain that real quickly. If we see this sharp sell-off, we reach support, then you see an initial wave up that does not take out the recent highs, and then it pulls back from there, maybe 50% or so. Then it's on a lower level, it kind of does the same thing. So it is building an uptrend, but it's trading in the same range that it's been in for a couple months. So from one perspective, you're looking at a trading range consolidation market, but from an underlying perspective, you're looking at the building of a new advance, which doesn't happen all at once. It takes some time to, if we do get this sell-off, time to lick the wounds, especially from those that bought new highs, bought the breakout, and then all of a sudden they're what's known as the weak hands. So when the metals have another sell-off here, all of a sudden they're going to be the ones panicking because they're now suddenly at a couple $100 loss in gold positions and don't have the fortitude to hang with it very long. So that's kind of how these corrections are often made within the market.
We'll take a look at what Eric's opinion is on silver right after this.
Value from success. Growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Eric Hadik. Eric, people so often lump gold and silver in together, but is silver a separate beast that should be paid attention to separately?
Well, absolutely, and that's what I was saying with this time frame where price inflation is something that's actually benefiting silver more than gold, and even some of the short-term technical tools that I use are showing divergence between the two. Gold reversed its short-term trend very quickly after the August 6th, 7th peak. Silver has still not done the same thing. So silver from that particular indicator perspective, and there's a lot of other things that I factor into the decision-making process, but from that trend indicator, it still has the potential to retest its high up around $30 as part of this corrective phase. So silver, even right now on a 2 to 4 week basis, is in a mildly more positive structure than gold, and so the correction is likely to be a little bit deeper in gold and lesser in silver. And there's a lot of other commodities that are beginning to really corroborate that as well.
If you're taking a look at what silver action is going to do over the short, mid, and long term, what would it be?
Well, it's very similar. The cycles in silver are very similar to what I talked about with gold, and I think that silver is going to continue on balance higher into May of 2021. That's when I have a much greater synergy of cycles coming into play, and at least from the current vantage point and the vantage point of when buy signals were triggered back in March, it's all been saying that a rally into May of next year is the most likely scenario. I've got certain levels that need to continue to hold to keep that in force. There's always price parameters that need to validate cycle analysis like that, so it's not just that one factor. In fact, that's really just the backdrop. But there's some intriguing potential for silver if this current correction can maintain a bullish structure, and it would be hard to explain that the factors that go into that verbally, but silver could still have some pretty serious upside potential depending on what unfolds over the next probably 2 to 4 weeks.
Mm-hmm. What kind of things are you looking at over the next 2 to 4 weeks?
Well, and that's what I said too. If I tried to explain the indicators and how they unfold and what it would need to keep them in a positive structure, I think it would be going into the weeds, and your listeners would just kind of get glassy-eyed. But it is similar to what I described in gold, that I think we'll see another quick sell-off and a period of consolidation as a new advance starts to develop.
We'll have more with Eric Hadik right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're talking with Eric Hadik. Eric, you've noted some interesting activity in the grain markets.
Yeah, grains are one of the other markets that coming into the second quarter of this year that I described why we should see a pretty sharp advance during the third quarter of 2020, and it has to do with cycles in July through September that my work was showing we should see an initial surge into early July, then some consolidation, and then a second bigger surge into mid to late September. And it just reinforced that idea that we would be seeing some commodity price inflation during this time frame. And the nice thing about it is the level of what you might call non-correlation, that not everything is rallying on, say, the Fed's view on inflation or on stocks or something else. These markets are rallying on very diverse fundamental factors, and so that just kind of corroborates these overriding cycles and this analysis, because there is a high level of non-correlation between the different markets and what is driving them, even though it's driving them in the same direction. Another perfect example is lumber market. Coming into this year, back in February, I was describing how cycles in lumber should turn bullish from May of 2020 into the first quarter of 2021. And lumber really adhered to that pretty closely. It spiked to its lowest level in April, but it was May when, at the same time, the cycles were turning up and some other indicators were turning bullish, that lumber started to, on short and intermediate levels, started to break out higher, and then it started to reinforce that with larger magnitude buy signals. But you get the sudden surge in housing, and even during the early days of COVID, a lot of your house renovations and whatnot that people were undertaking with all their new free and at home time, and just started to really increase the demand on lumber. And so again, you've got a higher level of non-correlation. Yes, to some extent, all of these things are the snapback from what happened in February and March during the early days of the coronavirus pandemic, but that was when the markets all overshot to the downside. But the thing is, now you've got many of these markets entering rallies that are both sustained and are much greater than the magnitude of the sell-offs that happened in the first quarter of this year. And it just, again, reinforces that conclusion that we would see price inflation from March of 2020 into the second quarter of 2021.
Now, I don't know if it's a factor or not in lumber, but we've had a Category 4 Hurricane Laura go rolling through the Gulf. They're expecting more hurricanes than usual this year. Does that pick up lumber sales because of repairs or people just boarding up their windows?
I think that unless you had a major thing, the purchasing it for preventative stuff like that, I'm sure regionally has that effect, but it's more when you get something real devastating that requires a lot of rebuild, when you see a noticeable or definable impact on the price of something like lumber. So, again, in that specific area, I'm sure you'll see lumber prices spiking, or did see it, but it's usually not something that's that discernible in the market.
Also, the hurricanes sometimes force the closure of a lot of offshore drilling and also all the refineries in the Gulf. The last number I saw was something like 84% were shut down before the storm. Does that affect oil or gasoline prices, or again, is that just a quick blip?
It normally does, but I think there's a couple factors at work this time. One is that the crude and unleaded gas had already fulfilled what was expected of them technically and from a price perspective leading into August. I actually have been saying since April that I thought this move would ultimately extend into mid-September, but the middle of August was the time frame when an initial peak was most likely, and so seeing some consolidation. And so I don't know all the exact fundamentals why oil has not responded to the hurricanes, but I think also when they were going through the Gulf, well, the first one definitely, and Laura to some extent, a lot of the intensification was right in the final couple days as it got closer to shore. But for whatever reason, the shutdowns haven't had a significant impact, and it could also be because there is so much supply still lingering around that a temporary shutdown isn't as significant as it normally would be. To where they have other places to go for supply, like buying some back from the, I know different oil companies had leased or sold with the strategic reserve to kind of store some of their oil because there was so much of a glut earlier in the year. So there's, it's just going to a different source for current needs. And so that any shutdown in the Gulf, as long as it doesn't do any serious long-term damage, is negligible in the market.
Eric, thank you so much for chatting with us.
Thanks for having me back, Jim.
My guest has been Eric Hadik, President and CEO of InsideTrackTrading.com. If you have any questions for Eric or any of our other guests, you can send them to info@HowStreet.com. Find us on Twitter @HowStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.